Robert, the big story out today, the February jobs numbers. Why do they look so much different than January and December?
Well, Susan, every now and then we just get a clunker of a report. If you look through the history of these numbers, there's really no rhyme or reason to it. And certainly sometimes a bad number can be the start of a series of bad numbers. I don't think that's going to happen in this case. We had very strong job growth in December, robust. I put a couple more superlatives in front of it for January, over 300,000. So it shouldn't come as a surprise that we get a correction in the February numbers. Certainly the March numbers will be very telling, and I expect to see a bounce back in March. But you know, if things continue to look bad, then we have to reevaluate. But it's a warning flag. It's not the end of the world, though, and like I said, I do expect a bounce back.
Okay, let's balance it out with some better news. What can you tell us about the ISM non-manufacturing index?
Well, that is an index that covers the broadest part of the economy, the service sector, and that came back in February, almost up to 60, 59.7. And any number that is approaching 60 is a very solid number for that series. And so on the one hand, we have the employment data, which gives us a little bit of pause. And on the other hand, we see this index, which is very strong. So it's a very mixed picture right now. I think there are enough risk factors out there that we have to take the soft numbers seriously, but we don't want to overdo it. And we don't want to say this economy is definitely cooling down quickly. I think it's cooling down a little bit, but not quickly. And I think we'll get through this year in good shape.
Robert, given the mixed picture, what are your expectations for the next Fed meeting?
Yeah, everyone in the world should be expecting no rate hike at the next Fed meeting, but we are going to get some good information. That meeting's over March 19th and 20th. We're going to get another dot plot, which is going to set forward-looking expectations. And I expect the dot plot to flatten out a little bit, maybe consistent with one more Fed funds rate hike in this cycle. We're going to get new economic projections, and of course, we'll get a new press conference from Chairman Jay Powell, and listen to hear what he has to say. And I think a big part of this meeting will be about setting expectations for bringing down the balance sheet and ending that process of winding down the balance sheet to $3.5 trillion by the end of this year.